Hello everybody. So today I want to talk about three very different things. Let's get started. The first thing is the market fire continues. As I record this video late Thursday evening, will be released tomorrow morning. So Friday morning around 6 a.m. is probably when you see this. The first question I ask myself, especially when I see the after hours run, is are we headed for a V-shaped recovery? If we head for a V-shaped recovery, that will be consistent with just about all the crashes that we had in the 2020 decades. When stocks artificially go so low, too low, they bounce, and they bounce back, and they bounce back fast. And it seems to be what we are going through. You look at the return today, yesterday, they were really good. And if you look at a whole week, we've had outstanding performance in stocks like Apple plus 10%, Amazon plus 10%, Tesla plus 7%, Nvidia is only up 1.6%. That's because of idiosyncratic reasons, namely the China ban on the V20 product, the lower end B20 GPU. That's idiosyncratic. That's it. But otherwise, the market is doing really well. I love to see that. The rise continues after hours, like I said. Bitcoin has lost its status as a stable coin. I had gotten used to my joke of calling Bitcoin a stable coin, 83 plus or minus $2,000. That was the case for like a month and a half, and we're back up nicely, 94,000. And of course, a lot of people argue that Bitcoin's action precedes over risks assets, and sure, QQQ is still seen as a risk asset by the market in general. I think one of the reasons is the almost back-to-back good earnings that we've had. Tesla's earnings, and I know cynics say, it was the most awful earnings ever. People make videos taking, awful earnings, sell. But Tesla's earnings was good when you look at the forward-looking statements, and that's really all the market that matters. And now I would argue Google's earnings were actually great, and I listened to more than half of a conference call of Google, and I remained amazed by Google. So the Q1 2025 earnings, I want to talk about that a little bit. It's a stock that I don't cover too much on the channel, but you may know that I own Google stock, and I've always called it my savings account stock, my just-in-case type stock, because I don't see it going anywhere, and it's as close of a value stock as I'm gonna get. And if you look, revenues growing 12% year over year despite so many headwinds. Yet if you look at the expenses, the total expenses only grew 8%. And of course, the traditional debate on this is: do you consider things like R&D? Do you consider things like that an expense? Right? This is the way accountants look at the world. They think R&D is an expense. The way I look at the world, I think R&D is an investment in the future. So the R&D investments of Google, I trust Google to do well on that R&D. And if accounting rules were up to me, R&D would go after the net income line. It would be an investment. So anyways, and some people argue the same for marketing. So the point is, despite all of that, you're spending less, you have fewer expenses, you're making more money, thus you're getting operating leverage, and it's quite outstanding. And if you look at the accounting metrics, that's what everybody reports. But if you look at that, their earnings per share is growing 49% year over year. Part of that is due to the buyback. They have a major buyback program in place. And I think I usually don't like buybacks, but in the case of Google, Alphabet, I like buybacks because in my view, they are quite undervalued. What, as always, impressed me with Google was how people easily forget about YouTube, and how people easily forget that YouTube is bigger than Netflix. And of course, Netflix has been in the news for the past 2 days about them bragging that they needed to be a $1 trillion company. And it makes me think about YouTube. Well, if Netflix should be a $1 trillion company, why don't we compare YouTube to Netflix? And I think that's interesting. So if you look at the subscription revenue, I estimate that about 60% of that revenue is from YouTube Premium and YouTube Music. So I take the 10 billion this quarter times 60%, and then I add the 9 billion of ads, right? And so that's a total of 15 billion in revenue for YouTube alone in the way I calculate it. So that's 60 billion a year. 60 billion a year is, in my view, what YouTube brings in, the money that it brings in. Are you curious about Netflix's revenue? Netflix's revenue is 10.5 billion in Q1. Annualize that, just like I did using the same methodology. That's $42 billion a year. So, and Netflix, of course, trading at more than 400 billion right now in market cap. Anyways, they think they should be worth 1 trillion, and they have only 42 billion in sales. And YouTube, and they highlighted that on the call, YouTube is the number one streaming platform. Netflix is number two. YouTube is number one by a wide margin, actually. And if you look at YouTube at 60 billion, so that tells me, well, if Netflix should be worth 1 trillion, what should YouTube be worth? Should YouTube be worth 1.5 trillion? Probably, maybe. So you see how you start doing some of the parts analysis on Google, you start getting a lot of Google for free, or next to free, because Google is only a $1.9 trillion business. And if I see Netflix arguing that they should be worth 1 trillion, then in my view, I can argue just fine that YouTube should be worth 1.5 trillion. Anyways, Google is the closest thing to a value stock that I'm ever going to own, I think. They're a value stock that still grows nicely. And I'll get to that in a second. But if you look at what are they? What is Google? Google is the inventor of the GPT, right? The transformer models. They invented that. Okay, they made a mistake. They were too slow to release it, but they issued a code red when ChatGPT came out. The founders came back for like 4 months. They did code red, and now they're back in the AI race. They are still a leader in AI. The usage of AI mode on Google, and this was launched in the US. I don't know if it's outside the US, but in the US it was launched. It's very successful. AI mode in Google is actually being very successful, and it's proving that the Google property remains the main destination property for many, if not most. And if you ask people actually who are not too savvy with AI, and you ask them, "Oh, do you use AI?" and they're like, "Yeah." And I'm like, "What do you use?" Well, oftentimes they'll tell you they use Google. Oh, it's just on Google. Oh, it's just there. So a lot of people, I think, are going to use AI from Google. By the way, even if you were to lose a lot of the search business, there's still search business that's always going to stay, and that's the most profitable type of search business. The one that's related to information, and the ones that especially related to things like local shops, local stores, local restaurants. This, in my view, at least in the foreseeable future, this, in my view, is not going to be disrupted by AI. That, $25 click ad for, I don't know, a swimming pool remodel from a local contractor, that business is where they make a lot of money, and I think that business is going to remain. Waymo. In this channel, I'm big on Tesla, so I believe Tesla is a superior solution. But the fact that Google is the number 2 with Waymo, and the fact that they really keep doubling down on Waymo, makes me look at Waymo as a major hedge to my Tesla position. I like having Waymo in case Tesla has the wrong solution. I don't think they do. I think they have a right solution, but I like having that little hedge in there. Of course, Google is a top 3 hyperscaler. GCP is a great cloud product, and they're doing well. They're the owner of Android. They talk so little about that on the call. Of course, Android is open source, but it's not entirely open source, right? There's a lot of the things that go on in Android that is controlled, influenced by Google, and so they own Android. To me, the fact that they own the biggest competitor to iOS is absolutely outstanding. And in fact, Google's Pixel phones are actually quite successful if you really think about it. Look around, you'll see there's quite a few people who have the Pixel phones. Anyways, Google has a portfolio of companies that is great, that is enormous. They have companies like DeepMind. Did you see that documentary, that 60 minutes documentary about DeepMind? Absolutely outstanding that they own that business. And many other companies, AlphaFold, companies in the longevity space. There are so many different companies that they own. They own enormous infrastructure, and I'm not going to come up with an infrastructure adjusted price for a company, but I know these subsea cables, when they're intercontinentals, they can run in the billions of dollars, and they own 33 of them. They own 6.99, so let's call it 7% of SpaceX they own. How many tens of billions of dollars is that worth? They own YouTube. They own Chrome. Chrome won the browser war fair and square. They own Gmail. Most people have a Gmail account. Anyways, and you get all of this for roughly only 4.25 times price to forward sales. So that's cheap. 9 times price to forward EBITDA. That's even cheaper. And the business is still growing at 12 to 15% a year. You may say I'm optimistic with 15%. I don't think so. I think this business is still growing from an enormous base. And so I can't explain the cheapness for Google. I really can't. And frankly, a lot of big tech stocks are cheap, like not just Google. Nvidia is cheap, right? Amazon is cheap, right? Apple is not cheap. Microsoft is not cheap. Tesla is quote unquote not cheap per conventional metrics. But Google is perhaps the cheapest out of the three. Between Amazon, Nvidia, and Google is perhaps the cheapest, right? But Nvidia is very cheap too. I find it very cheap. So anyways, for what you get, that's very impressive in my view. All right. I had a few comments actually, but one main one who asked me about Sol treasuries and what I think about Sol. So I want to address that a little bit in the video, especially as a lot of people, are weighing in on MicroStrategy and Bitcoin treasury strategies. And so Sol is a whole different beast, a whole different animal. So let's talk about Sol. Yes, Sol, first of all, what do I think about Sol, right? Sol is in my view, it's looking more and more like they are the consensus layer one. That's the full app layer one, the quote unquote internet computer, if you will, the world's blockchain, right? The world's decentralized apps. What are they going to be run on? It seems like the consensus is that the layer one winner is going to be Solana and less Ethereum, and of course everybody's competing to try to know who's going to be the layer one winner. But it seems like next to Bitcoin there will be another winner. For the longest time people thought it would be Ethereum. If you look at most of the metrics, it's looking like Solana is looking much better than Ethereum. But the fact that Ethereum lost doesn't prevent the fact that Solana could also lose at some point, even though in the way they're coded, the way the hardware works, the way the Solana evolves as the speed of the hardware is very interesting. But you have a very strong SUI community who argues that SUI is the next layer one that is going to take over Solana. But anyways, everything that points to Sol being the winner. I've used Sol. I own Sol. I think the interface, the UI. I love the UI of Solana. It is so much better than MetaMask and all of these things. If you were there back in the day, and it's dirt cheap, right? Solana transactions are cheap. Lots of good things going for Sol. And if I had to pick one layer one next to Bitcoin, I would pick Sol, right? I would not pick Ethereum. So that's point number one. And then, of course, you can own Sol and stake it on your own, and that's fine. You can do that. But then you own an asset that is not on your TradFi rails. And so if you own an asset that's not on TradFi rails, how is it going to work when you're trying to implement strategies for your future self? Like buy, borrow, die strategies, like borrowing against your assets, selling options, right? How do you sell options on staked Sol that you have in a wallet that has been collecting dust for the past 2 years? Like, how do you do that? You can't. So owning Sol on TradFi layers, right, on TradFi rails, owning Sol in Robinhood, owning Sol in Schwab is actually a very appealing proposition, and I have been waiting to increase my position in Sol. I have been waiting, like a lot of people, I've been waiting for the Sol staked ETF, which it looks like we're going to get it this year. That's what I've been waiting for, the Sol staked ETF. And it's not available just yet. Now, you can get a little exposure to the Canadian staked ETF via the ARK Invest ETFs, and that's a pretty big deal. But that's a tiny exposure. What if you want pure play exposure to Sol staked? Well, you on TradFi rail, right? You really can't, except trying to buy a company that does that. And of course, the pioneer in this space is a Canadian company. It's Sol Strategies. But just like I do, how, first of all, Canadian companies always trade at a premium for some reason. They're always more expensive than US companies. Take, even Shopify. Like, look at Shopify. Like, your tech firm, your great Canadian tech firm trades at a tremendous overvaluation compared to your great American tech firm. So I don't know why Canadian companies are more expensive, but they always are. And from a price to NAV standpoint, I checked Sol Strategies. It's a 2.2. So that's too rich for my blood. 2.2x price to NAV is too rich for my blood. Janover, right, and they're going to change their ticker to a DeFi development company. That's why they still use both tickers, but they're going to switch from JNVR to the other ticker pretty soon. This one is interesting because the price to NAV is 1.63, but that NAV is mostly back with debt, with recent debt, which is what I don't like, right? Because you're much closer. You're not built on entirely solid capital if most of your Sol you acquired via debt, and so I don't understand. The behavior of the stock has been absolutely outstanding, but I feel like I missed it. Now, another thing that's good for Janover is because they had a history as a company in a different business, in the commercial mortgage business. They actually are well treated by U.S. brokers, and they have some establishment. Look at this. They have you have a Solana related company who has a maintenance ratio that is not 100%, 80%. That's bad. That's worse than MicroStrategy, and MicroStrategy is very bad, but that's even worse. But that's still so much better than what you can get right now. So kudos for that. The price to NAV, kudos for that too. It's a little low. But my plan is it's still my plan. It's been my long-term plan. I'm trying to be disciplined on this. My plan is to wait for the Sol staked ETF. And why do I want to wait for the Sol staked ETF? And for Janover, it's simple. It's more emotional. I feel like I missed it. If I look at this stock, right, it's up 1,100% in a matter of 20 days. So obviously I'm going to feel like I missed it. And so you move from 5 million to 72 million. It feels like kind of like chasing the price. It's behaving, and that's because these assets are so new. They're not established, right? They're still behaving closer to meme coins, and they're a small cap, so that doesn't help. You're having this behavior because these assets are not established. They don't have an established shareholder base. There's a huge turnover in the shareholder base. There's also the issue that Janover has, and they brag about this in the investor presentation. They have more than 50% insider ownership. Well, okay, so if you have 50% insiders, what if the insiders decide that they want to move from 50% insider ownership to, I don't know, 25% insider ownership? What happens to your float? What happens to your shares available for sale, right? That's a short-term risk, roller coaster type risk that I think is a little high, to say the least, if not very, very high. And I don't want to be exit liquidity for someone else who were to decide, okay, well, I'm going to own 50% of a business and may decide, I'm going to own 35% of a business now. So, and they issued a bunch of debt to buy Sol, which, that's a powerful idea. But and I like a little debt. I like when companies sprinkle a little debt. But I want to see a little debt sprinkled after you have a huge sum of permanent capital, right? And that's why I would much rather see a company that, say, acquires Solana by collecting the price to NAV, right? They're trading at a 1.6, print dollars for 1.6 and then acquire Solana, grow your pie slowly. And then once you have a big stack of Solana, at that point, consider getting a little debt. Like I think a la MSTR, right? Very close to what MSTR does. I think that's a much more stable way to approach it. And lastly, of course, they attacked the best performing stock in my portfolio, and I really don't like that. The shade thrown at MSTR and Sailor and BTC is bold in my view. It's not as bold as 21, right? XXI, the ticker I covered yesterday. It's not as bold as Jack Mallor's shade, but it's still pretty bold. And it's just same argument, like talking about the core business being a drag on valuation. No, it's not. Most of valuation is based on the Bitcoin, right? Saying that the core does not help them buy more Bitcoin. Well, that's not entirely true, in the sense that and this is, savvy followers of MicroStrategy will tell you that the core business is needed if you want to be added to the S&P 500, if you want to maximize your odds of being added to the S&P 500, if you want to maximize your odds of being treated as an operating company and being judged by the committee at the S&P 500. It's a good thing to be a software company with a treasury operation on the side. And so, anyways, this shade thrown at MicroStrategy in my view is not the way to go. Bitcoin you go to the top with Bitcoin not by putting down overs, and this is true, by the way, for all 21st century business. 21st century businesses win via synergies. This is not a synergistic thing to say, especially when the playbook is a copy paste of MSTR. I mean, close to it, right? Not exactly, because there's some stake, but close to it. And the Solana volatility is 2x more volatile than Bitcoin. I love volatility. I think it's great, but again, that's when you have permanent capital, right? If all of your SOL that you owned is backed one-to-one by debt, then volatility is a poison, right? Volatility is advantageous for a stock like MicroStrategy because MicroStrategy is mostly an ATM story and they have very, very little debt. $8 billion. It's a $96 billion company, MicroStrategy. MicroStrategy is a $96 billion company. They have $8 billion worth of debt, right? That's healthy. If you have it one-to-one, you know, if you're a $50 million company and you have $50 million worth of debt, that's pretty risky. In that case, volatility is poison and not a good thing, right? So that's another point that you know makes me feel like that. Anyways, like I said, volatility. I love the concept. I understand. But you need to be mostly backed by permanent capital. I don't think Janover is like that just yet. Janover is mostly backed by debt as of now. You know, and you know, it's good that they bet the farm on this, you know, and oftentimes you get into these strategic transitions when you must do something, right? Bitcoin is on a need-to-know basis, as Saylor says. And I'm totally not denying that I could be wrong. You know, a good idea, if you look at the change in valuation in 20 days for Janover, a good idea could easily be worth $72 million. I have no issue with a strategic change leading to a change in valuation of $72 million. I have no issue with that. I refer to you to Elon Musk, who might actually be underestimating his value, but he says that his time, an hour of his work, is valued at about $100 million. An hour of his work generates about $100 million of wealth. So I have no issue imagining that probably a plan that probably took, you know, I think, I mean, it's got to have been in the works for months, right? I gotta believe that it's possible that an idea is worth this much money, right? An idea can be very powerful, but nonetheless, it doesn't change the fact that acquiring SOL via convertible debt is a little risky. So in conclusion, I feel like I missed the boat on Janover. The key with these things is probably like as soon as you see the news, is probably buying them as soon as you see the news. That's probably the key. But how do you analyze? Like, I'm not comfortable doing that. You know, it's like you know, and it all depends on your profile too. Like if you're 18 years old and you're really trying to make a lot of money quick, then you can take that risk. But you know, when you're more established and you have a big portfolio, you want to make sure you make a sound investment. At least that's what I think. And I think also that a Sol ETF is a more powerful value proposition. That's why I'm patiently waiting for the Sol ETF to be here. And why do I think a Sol ETF is a better value proposition? It's simply because with a Sol ETF, you see, you don't have to pay a premium with a Sol ETF because Sol, the asset, Sol itself has a built-in yield in it through staking. So if you have a staked Sol ETF, you'll have a built-in yield. You'll have a built-in yield in addition to the scarcity of the asset. You also have a built-in yield in there that's on top of the scarcity of Sol, right? And of course, Bitcoin does not earn a yield, but Bitcoin is the hardest money on earth. It doesn't need to earn a yield. Traditional Bitcoiners will tell you if you have the hardest money on earth, if it's impossible to create any more of it, you don't need to earn a yield. It's just every single value out there that needs to collapse against the price of Bitcoin, and really just keeping the same amount of Bitcoin over the years, over 100 years, your Bitcoin is just going to be worth ever more, but you don't really need a yield. So anyways, I'm still looking for the perfect wrapper for Sol. I'm still looking for the perfect Sol company that will not be beat up, and I haven't found it just yet. So find me a company that has actual Sol permanent capital that they got via dilution or via transitioning from a bunch of cash to changing the business model, and that don't have a lot of debt or just a little debt to spice up the return, but not that much. Then I will find that company much more interesting. In the meantime, I am still waiting for the Sol staked ETF. Anyways, this was not financial advice, not investment advice. This is only entertainment. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.